Welcome back to the channel. So in this video, we are going to be looking at opening up a bearish position on Micron technology. I do feel that the stock is in a spot right now where you are having a lot of retail investors looking to go long the stock, especially as it's come off from its earnings, which I think if anything actually warrants looking at it a little closer and possibly opening up a bearish position. Now, just show you guys a few screenshots here. You know, there are people on Twitter that are looking at Micron right now and are saying, hey, this is a no-brainer buy, because if you look at the forward PE compared to other chip stocks, it's trading very, very cheap, this and that. Yeah, sure, of course. It does look super good. I'm not gonna lie, but here's the thing. The price action that we're seeing isn't exactly telling us that same story. Because as we sit here on a daily chart for Micron, the earnings came out on this particular day. You see the gap up, right? And ever since then, we've kind of struggled. And at first, things looked fine on this particular day where we kind of traded all the way down below where we closed before earnings. And then we recovered. This looked great for the longs. But as you see, we've actually rolled over since then. And you might argue, well, maybe the whole chip sector just is getting slaughtered. And sure, you know, we could run that argument. This is SOX, right? This ETF semiconductors here. It hasn't been doing that great too, but you could almost argue here that it still looks a tiny bit better than Micron, which should be the most undervalued chip out there that people are kind of hammering over and trying to go long the stock. Now, the way I like to play this, so it's pretty simple as to what's gotten me interested into Micron. The fact of the matter is, we had earnings very, very recently. Earnings were great, phenomenal. That's why we gapped up, right? This is a serious gap up. This is a 20% move at the very peak. We've given all of that back and more. Now we're also seeing a market like NASDAQ, we'll open up the Qs here, hasn't really done too much, right? Clearly, the semiconductor AI has taken a little bit of a backseat here. And if you're looking to put on a bearish position on the market, it kind of makes sense to go after the laggards, right? And AI, I feel like there might be a rotation coming out of AI, and I think Micron might be the spot to go after it. Now, that all being said, let me show you the sort of position that I put on for Micron. I did put this on about 5-10 minutes ago, not on Thinkorswim. This is just this is like one of my SEP IRA accounts. What's it called? Interactive Brokers is my main trading account, but I do use Thinkorswim to help model out the trades here. And as we look here, what we did is a butterfly trade, because the implied volatility is super high on Micron. Okay, so we can't just buy options, can't go long naked options and think that's a-okay. If implied volatility comes down, we're gonna get crushed by it. It's not the easiest thing. A butterfly helps mitigate some of that, reduces our exposure to changes in volatility here. And as we look here, we see that we bought the $1,000 put right about here. I mean, keep in mind, currently Micron is trading at 1039. So we bought $1,000 put. We sold 6 of the $800 puts, which is right here at the very peak. And then we bought the 650 puts all the way down here, right? So this is kind of how things look like. And as you can see, we did a 9% move by expiration, which is August 21st, to be break even. And anything past a 37% drop in the stock, we actually gave up our gains. Now, with all that being said, this is if we hold to expiration. The purple line represents what would happen if the stock made that move today, right? So let's say the stock made this move 2 weeks from now. This is how the P&L chart would look like with Micron. Okay, so as you could see in this area, it'd be like $8,200. Now, again, this is with it being in mind that nothing changes volatility-wise with the stock itself. As you could see, we are still positive Vega, so drops in volatility would actually hurt our position. It would shrink it down. We could pretty much verify that by bringing down volatility. And as you could see, it should I mean, it will take a lot of clicks here, but as we cut it down, it will bring down our P&L. Now let's just get rid of that. Okay, so this is what we put on. Worst case scenario, obviously the stock continues going up. We are holding max losses in this exact environment that we're in right now. Like if the stock did nothing, we would be at max loss, but we do not want to hold the stock for that long, because guess what? The thesis here is that Micron is not going to rally. It's not going to do much from this area here, right? If we obviously break over, let's say 1170 or something, right? Okay. Thesis of saying that, hey, Micron might be a laggard here, it's not looking healthy, it kind of falls apart, right? So we should not be in that trade post, say, 1077, 1100 if you want to stretch it, right? As you could see at that point in time, the loss would be like $2,600 if that were to happen. Then if it happens a little earlier, next week, for example, you know, we could take a little bit of a smaller loss. Point being, we're obviously going to get out way earlier before we take that maximum loss of $14,000 you can see at the bottom. Okay. So if I open up Interactive Brokers here, you can see the actual trade that was put on and the fill price. So as I said, the $1,000 puts we bought, we sold 800s, and we bought the 650s. And the fill price was $48.75 with commissions and all. It came out to $49.02. And that's the position. And as we kind of speak here right now, let me just open up the watch list and just see what the market's been doing. ES had a little bit of a pump actually as we've been talking, and so has NASDAQ. Relatively significant pump. Now, even with that, you know, interestingly enough, MU's not trading that great today. I mean, look at it from the open. It's still kind of trading relatively sickly. If you look at stocks, yeah, stocks obviously, you know, it's kind of breaking new highs in the day here. This is obviously the pre-market section. The market's having a pretty good day, rebounding right now. So that's my position on Micron. Again, there's no guarantee. First of all, I never go into these positions expecting that I'm going to win 100% of them. You'll see if you go through my channel. Now, I've had quite a few streaky winners as of late, but normally speaking, I'm okay with taking way more losses than winners, because I look to try to have my winners way larger than my losses, right? That if I have to be taking a $2,000 loss in this position, well, there's a good chance that had the trade worked in my favor, I probably would have profited between $8,000 to $12,000 and so forth, right? So I'm okay with taking losses here. So just because I'm presenting my thesis to you guys here does not mean I'm geared up for Micron to crash and burn right now. As it stands right now, it's obviously been one of the biggest performers of the year. The chances of trying to mark the absolute top of it, super rare, super hard to actually do that, right? And I just see an opportunity right now of how it's been trading the last couple days and how the options are being priced, that there's, hey, you know, I could put on this trade right now and it doesn't look too bad. Now, if you have any questions for me, let me know in the comments below. Other than that, thank you guys for watching, and I'll see you next time.